Hello everyone, how are you? Good to see you. Welcome back to my another YouTube channel video today. It's about my monthly performance in the month of October 2024. So I will be sharing one of my trades today, and hopefully you will learn something new by the way I view the market and the way I enter and exit my trade. Overall, in the month of October, I would say that the markets were really choppy for me. So I think some of you may have also been struggling to making profits or extending the profits overall. But the key was really to minimize the drawdown per trade. So with my strategy, KTS, the most important is the risk management and psychology management as well. So from that perspective also, I would like to share my monthly performance today because I thought it's also interesting topic for everyone who watched this video today. So now let me switch the screen. And so let me also go to here, the Discord group. So here in the Discord group, I share my trade, and this is my monthly performance. But let me open Excel spreadsheet because some of the performance is a bit cut with my window. So let me open Excel file. So this is it. So every time I enter exit my trades, I record my trade on the Excel spreadsheet. This is a spreadsheet I used my own, but now it looks nicer because this is for basically the students who take my class to master my strategy. Before, when I originally created this spreadsheet, it was more plain, no color and no columns like this way. But I was basically editing the Excel spreadsheet for this to look nicer, and for my students to be able to use and review the performance. So overall, I took 6 trades in the month of October, and as you can see, for example, here it says 1 Euro USD and 1 Euro USD. And next 2 USD/JPY and 2 USD/JPY. So every time I enter trades, I take 2 positions and 2 stop losses. And that's also my original way of doing the trading. I used to take only 1 position and 1 stop loss, but let's say the market goes up towards my direction and retrace and hit the stop loss, and then the market goes towards my direction, but without my positions. It happened many times. So I was wondering how to avoid that kind of situation, and figured to have 2 positions and 2 stop losses. So I trial the profits in different time frames, in different waves in the market, and I will show that also today's video as an example. So again, in the month of October, I took 6 trades. In each trade, I take 2 positions. That's why you see 2 names on each trade. So 6 trades. And the reason why I said it's very choppy in the month of October was first, I wasn't really seeing the trending markets based on the daily time frame, not so much. So that's one of the reasons. According to my KTS, I do execute my trades based on the 5 or 15-minute time frames, but when it comes to looking for the trending markets to trade, I do take the daily and 4-hour time frames. So I was monitoring the chart every day, but I do see more trends based on 4-hour time frame, based on my strategy. So that's why the markets were really choppy, and weekly were also hardly trending in the month of October. So that was really a choppy market. So I took 6 trades, and the first one, second one, and third one, and fourth one were either loss or break even. So I haven't been able to make profits until the 21st of October. The 21st of October, I took nice profit on USDJPY. I was able to take 205 pips times 2. Again, I take 2 positions, 2 stop losses. That's why I took 200 pips, 205 pips times 2. So this one I will share it today so that you know how to trial the profits like I do. But the rest of the trades were basically loss and break even. And to be honest, I think losing trades or break even trades are also important to explain. But in this video today in YouTube, I will explain how to how I trial the profits. And for the rest of the trades, I explain in the community KTS Academy or GTS class. So if you want to know more about the details, then feel free to join the course. So again, in the month of October, so because of that, the win rate of my performance was 16.67. Win rate of 16 pips is really, win rate of 16% is really low, right? No one, I guess, wants to have 16% of win rate as a strategy. But that's how I built my strategy, and it happens sometimes. Because I don't really look at the win rate, to be honest, with my strategy. But what's more important is here, the profit factor. The profit factor is calculated by gross profit divided by the gross loss overall trade. And that was 14.83. So basically it shows the risk and the reward ratio in terms of money value. So 14 profit factor is very high. And all because I was able to capture more than 200 pips on USDJPY times 2. So, and this is the power of the trend follow. So, although even if you lose like let's say 6-7 times out of 10 trades, if you are able to capture bigger pips in 2 or 3 trades out of 10 trades, then overall you win. And that's the most important aspect of the trend follow strategy. Small, losing smaller and making profits bigger, and be consistent in this way. But if to be able to follow this strategy, you need to twist your psychology. Because regarding the psychology, I think I will talk about it in different live stream or videos. But the risk management is important, and psychology management is very important, in my opinion. So profit factor 14.83, and my return was 19.7% out of 6 trades in the month of October. So so today let me explain how I took the trades on USDJPY, which I took on the 21st of October. So I have the screenshots of my trade. So here are the screenshots. So every time, it's better to take screenshots like this way. So let me just make it a bit bigger so that you can see in a bigger picture. So as a trend follower myself, like I mentioned earlier, I look for the trending markets based on daily or 4-hour time frames. And and also if you want to know more about my strategy overview, then you are always welcome to join the free KTS course, which I launched it recently. You can actually come to my website and also KTS Academy. So here's my website, just quickly introducing. Here's my website. If you scroll down a little bit, then there's a pop-up free KTS course. You can click here and join, or you can come to my KTS Academy and click on here free KTS course. Then you can access to the free KTS course. There are total of 8 videos, and this is to get the bigger picture of how I designed my strategy. So yeah, so if you have already taken the free course, then you know already what I'm doing, how I view the markets in terms of trending markets. So to me, 4 hour is trending at the moment, and also I took 30-minute time frame as confirmation. It's also bullish to me from Ichimoku viewpoint, and also price action wise, there was N wave, so that was nice entry timing. And here is the 5-minute time frame. So 5-minute time frame has been showing consecutive N waves, and recently there was ascending P wave in breakout as well. So that was ideal situation to trade for me. And also based on some entry confirmations like stochastic cross or band walking, and also the trend line bounce, I have specific rules to enter trade. So I execute the trade based on those entry confirmations. So with my strategy, 4 hour is bullish and 30-minute chart is bullish too, but I don't jump in the market. I used to jump in, or I don't want to say jump in, I still waited for the trending markets to happen, but every time I see trending markets, let's say I enter trade without paying attention to the lower time frames and the market retrace, and I used to lose so big. Back then I was also poor at the risk management, and that's why. But at the same time I was thinking how to be more specific on my entries. You can enter here, you can enter next bar or previous bar, but which timing is best, and how I can look for the trading edge to enter trade. So for the edges, I use 5 or 15-minute time frames, and in this case I took the 5-minute time frame for executing the trade, and I took the stop loss of 30 pips here, 150.074. My entry was 150.38. So that was my entry. And then after that, the market went towards my direction. So this is also my strategy. It's that, so here was the original stop loss, which was here. And so this is SL. This is my buy entry here. And as the market goes towards my direction, I move the stop loss SL manually to here. And this is called break-even line. This is what I call the break-even line. I used to call it zero line, because then it becomes zero loss, right? So as soon as I move the stop loss to break-even, what's good about this strategy is that it becomes break-even trade, break-even or win game. Before you move the stop loss to break-even, the game you're playing is still loss or win game. But by doing this, the game becomes break-even or win game, which everybody wants to play, of course, so that you don't lose in this particular trade. So this was when I set the break-even line so that I don't lose anymore in this trade. And then afterwards, I left the chart for a while, and then the market went up still. This is again same 5-minute time frame, and I found the market is still bullish. Higher time frame is still bullish too. So this is when I trial the profit. So I move. So again, I have 2 stop losses, 2 positions, and I moved one of the stop losses to here and fixed 18 pips of profit. And other stop loss, I still keep it at the break even and left the chart. And then also here is the next screenshot. In the next day, this is previously, yeah, this is before I went to bed. And then yeah, here, or actually this was not before I went to bed. This was still in the midday, but I was away and I didn't check my position because I don't lose anymore, so I don't really care. And then next morning, I checked the chart and I found the market went up towards my direction in Asian session. So I simply move the stop losses here and here. So the first stop loss, I moved it to 160 pips of profit. And second stop loss, I moved it to 119 pips. So this is how I fix my profit. So by doing this, let's say there's a big news or there is, some surprise event, which can happen anytime in the market. In case if the market goes bearish all the way, like this way, for example, I still have these profits to be fixed. But if my stop loss is still here on the break even or even below, then when I'm away from the chart, then the market may hit the break even or it may go all the way down to the stop loss and I may lose a trade, although I have some nice running profits. So this is one of my strategies or mindset. So as long as trend happens, I continue trail. And when it stops, I fix the profit. And to me, this is not the end of the trend yet. Because again, I do look at the higher time frame. When Ichimoku shows it's still bullish momentum, buyers are dominant over sellers, then there's no reason for me to exit yet. I simply trial the profit. So that was a screenshot on the next day. And then later on, when I checked the chart, I moved the stop losses to here. So I moved 2 stop losses to the most recent low on the 5-minute time frame, and I fixed 205 pips of profit. And that was because if you look at the 5-minute chart, there is consecutive reverse N waves. So the market is going bearish from the 5-minute perspective, and also Ichimoku shows also a range. Back then, in terms of the 4-hour time frame, it was showing like this way. The price is still above the Tenkan-sen, Kijun-sen, but if you closely look at the Tenkan-sen, Kijun-sen angles, they are flat, right? Tenkan-sen, Kijun-sen flat. That means the market potentially retraces to either Tenkan-sen or Kijun-sen. This is Ichimoku nature. Just to talk about Tenkan-sen, Kijun-sen quickly, they are showing, Tenkan-sen is showing the short-term market participant, and Kijun-sen is showing mid-term market participants. And short-term in Ichimoku is 9 bars, and mid-term in Ichimoku is 26 bars. So these are the market equilibrium, I would say, in Ichimoku. But to make it more clear, this is more like how do you say, like a market participant's comfort area, comfort zone. So for buyers, since price is above the Tenkan-sen and Kijun-sen, for buyers in a short term and mid-term, this is uncomfortable. They think it's overbought. They think it's extending a lot. So the market needs to correct. The market needs to retrace or consolidate for this to go up again. So sellers come in the market and buyers see the sellers coming and they at some point start to buy, and that's when short-term buyers do at the Tenkan-sen, and that's what mid-term buyers do at the Kijun-sen. So either way, when Tenkan-sen and Kijun-sen are flat, the market tends to retrace in this logic behind. You can actually see here also when Kijun-sen flat, the market retrace, or here too, whenever Kijun-sen is becoming flat or Tenkan-sen flat, it tends to go back to the Tenkan-sen or Kijun-sen. So here, the market may retrace. So this is when I don't want to keep the stop losses as is. I want to fix the profit here, but I don't exit manually. So this is how what I see in 4-hour time frame in USD JPY, and then that's why I moved the stop losses higher. But in terms of 5-minute time frame, at this point, still the market is bullish. I see there is a gold cross in stochastic, and the market is going up and broke the resistance here. So there is still, the market may go up again still and continues bullish. If that's the case, I still trial. But in case if the market retraces, I just take profit here because the chance is now 50-50 when Tenkan-sen, Kijun-sen become flat. So that's why I don't exit manually. But if the market goes down, then I will take profit manually. In this case, I trialed and I let it go. And then next day, or actually next moment, which is, next morning, the market actually went down gradually and hit the stop losses. And that's how I took the profit of 205 pips times 2. I hope that makes sense to you. But to be able to do this, you have to be very patient. If you are not patient, if you just take profit in the middle of the trend, just because you get 100 pips, just because you are happy to be able to make profits, and then you may miss out the next potential, the further potential profits. So like I mentioned before in the live stream or in the video session, so this was my entry here, and this is my buy, and this is, let's say I exited here, for example, then so let's say I exited here on the blue line, for example, and that means this is the start of the trend, and this is the end of the trend for me if the market retraces. So I don't really take profit. I don't want to take profit on the very high, or I don't aim to enter on the very low. The trends are happening, every week, every month. So you don't have to take all the way from bottom to all the way from at the top. So that's why I say, let's say if I put the stop loss here, then this part is, the start, beginning of the trend, and this part is the end of the trend. But you don't have to take these parts. So this is like, fish. This is the head of the fish, so to speak. Head of the fish, and this is the tail of the fish. So let's see. This is the tail of the fish. This is the head part of the fish. Sorry for my poor handwriting. This is basically head. Now it's becoming like a mouth. But anyways, you get the idea, right? So you only take the body part between here and here, because that's where the meat is. You don't have to take here or here. And that's also very important logic or idea as a trend follower. I used to try to develop the strategy to be able to capture the very low and to be able to take profit on the very high. But I gave up because it never happens, and it's not really important to do so in trading, to make profits consistently. So the lessons are, the most important is to be able to be consistent with discipline, because that's what the strategy are for, so that you don't trade randomly. Strategy will make you consistent in trading, and it will make you more patient, because if there's no entry opportunities as per the strategy, then you don't enter trade. So strategy will make you disciplined as long as you follow it, but it doesn't mean that you have 100% win rate. It's impossible to aim for 100% win rate. I would say even 90% or 80% win rate is difficult. So what's more important is to be able to consistently, trade based on a strategy, and according to my strategy, the important thing is to lose smaller and make profits bigger. So we have a word in Japanese, but losing small and making big profits so that the future profits covers your previous small losses. But if your losses are already bigger and bigger, let's say your drawdown is 20%, 30%, or 50% even, then it becomes more difficult to cover the losses, technically speaking. But if your losses are still 2% or 3%, 5%, then it becomes more easier to cover the losses, especially by using the trend follow mindset. Becomes easier because every time you enter trades, you're on the trending markets. So, and once the trend happens, and once you can ride on the wave of the trends, then you're able to make profits, and that's really easy. So that's how you let the market make money for you, and you let the time make money for you. You have to use the momentum of the market, to take profit. So I feel that every time I see the performance myself and review my monthly performance, I really feel that it's not me that I'm making profits. It's the market and also time and momentum that let me make the profit. But this is also very opposite psychology from regular job. If you go to office, let's say every day, if you work, if you attend the meetings, and if you do some paperwork, or if you are in construction industry, if you build something or if you engage in something, then you get paid, right? You don't get paid just being here, just being there and sitting down and doing nothing. You don't get paid. But in trading, it's possible. You simply execute the trades and then you sit down and wait. Then you make profits. Sounds easy, but it's very difficult, psychologically speaking. Physically, it's easy, but psychologically, it's very difficult. So that's why psychology is very important. You have to change your mindset from you being making profit to the market or the momentum bring you profit. Then I think your psychology emotion becomes more easier, and it makes it more consistent to make profits and become a non-losing trader consistently. So that was my monthly performance review today. Thank you very much for watching the video. And again, if you want to learn or if you want to check my overall strategy, then you're always welcome to join the free KTS course here or from my main website here too. And if you want to know more about my strategy or master my strategy, then you're always welcome to join either KTS Academy, which is monthly subscription, or the GTS class. The links are on the below description. So again, thank you very much for watching the video and hope to see you again soon again. So until I see you next time, please stay healthy, stay safe, and stay gold. Bye for now. Mata ne. Thank you very much.